What's up guys, welcome back to the channel. Today we're going to backtest together to show you how to backtest, what to look for and how to do it properly. Alright, so we're going to backtest a strategy together. And I've gotten a lot of questions about this, and a lot of people want to backtest, but they don't know how. And recently I wrote a blog about backtesting. If you go to my website, cdfxtraining.com, you will find the article in the blog section. And there I go over everything you need to know when you're going to backtest your strategy manually. Today I'm going to backtest this strategy with you guys. So stick till the end and step by step, you will see how I backtest. Before I go into the charts, you want to know what I'm going to backtest. So I created a simple strategy. Sell a retrace to a naked daily 3-touch level, minimum of 3 touches. Sell the last bit of structure pre-breakout. Stop above the high of the breakout candle. Target 1-to-1. 3-touch level is 3 touches not further away from each other than 0.5 times ATR. Buying is the exact opposite. Do you see how clear this is? If we take a look at rule number 1, sell a retrace to a naked daily 3-touch level. What I mean by that is this. We have 3 touches, we have a breakout, so touch 1, touch 2, touch 3. They are within 0.5 times daily ATR. This is all done on the daily time frame. And we want to sell a retracement to a naked 3-touch level. And naked means that this level hasn't been retouched yet. So this level hasn't been retested yet. The next rule, sell the last bit of structure pre-breakout. This is the last bit of structure before we broke down. I want to emphasize recent price action the most, so I want to sell there. The stop goes above the high of the breakout candle. Let's say we have a candle here that opens above, closes below the level, then the stop goes above the high. The entry will be at this level, and the target will be a 1-to-1. That's all I want to test. So the question I wrote down is, if I take a trade at a naked daily 3-touch level at 1-to-1, what is my win rate? Do I win more often than not? That's essentially what I want to test. Very simple strategy, but notice how clear it is. Most people don't make it this clear. And when you're starting with trading and when you're learning a lot of concepts, but it's really hard to go from concepts to rules that you can test. But you need to do this because otherwise you cannot backtest. So what concept am I using? I'm using the concept of support becomes resistance. That is the concept that I'm using. I'm selling a retracement for a further move down. So essentially, I'm just trend trading. Let's say we have a downtrend and we get a breakout and I'm just selling a retest, but I've made it very, very rule-based. I know exactly which levels are good and which ones are not. I know where I will be selling. I know where the stop goes. I know where the target goes. Please, if you are going to backtest, be as clear as possible. Otherwise, your results will be meaningless. And these rules can even be made more and more clear. When you are backtesting, you will usually notice things that are, this is not really that clear. And then you go back and then you make sure it's clear. And then you start over again. Step by step, you become better. So this is the basic strategy, very simple. And I'm going to just track the performance here with you guys. Now, after you've been backtesting, and you might notice after 10, 50 trades that some things keep happening over and over again. That's the power of manual backtesting. That's why I think it's so key, because sometimes you notice, hey, the trade runs very often. When I take profits, it still goes on. Then you might think, okay, what if I test a 2 and a 3R target? What if I keep track of the MFE? So how far does price go before it takes my original stop loss? That's how you build a strategy. You start simple and organized, and then step by step, based on what you see, you make adjustments. So let's go to the charts and let's test this strategy. So you want to replay bar by bar, like how I'm doing right now, because the setup, the strategy is not 100% mechanical, and therefore you want to play bar by bar because you don't want to basically see the future and use hindsight as a bias. So we're going bar by bar. Let's take a look at this. Look at this level. This is more than 3 touches, and these are all in the same area. 1, 2, these are a bit higher. This one is again in the same area. So I don't have to take a look at ATR. This is a clear level. What was the rule for the strategy? Let's go back. 3 touch level, minimum 3 touches. That's what we have. Naked level, and we sell the last bit of structure pre-breakout. What is the last bit of structure? This low. This low is the last bit of support we made in line with this level before we broke down and closed through it. That's the low I want to sell. Is the level naked? Yes, it hasn't been retested yet on the daily time frame. So what do? Entry there, stop above the high. I've adjusted the fib tool so that it's easy to backtest this. So you have the entry here, SL above the high, and this is 1R. Let's see what it does. We get a fill on the entry, and immediately 1R is hit within the same day. As you can see, we close below the 1R. So that's 1R hit, guys. But we want to keep track of more. 2R hit, 3R hit, 4R hit, and it goes on and on and on. So basically, we go back and we fill in the date of the entry, which is 20th of March. We fill in a yes, and a yes, and you can fill in the MFE, which basically is how far did price go before it hit your original stop. That's something you can track as well to determine which target is the most optimal. But let's keep it very simple. They hit those targets. Next one, and as you can see, it's very structured and organized because the rules are so clear. So I'm removing this one. Let's go. All right, guys, what do we have here? Another 3 touch level. Let me draw it in. 1, 2, 3 touches, clean level. If we take a look and we measure from that low to this low, that's around 45 pips. And if we take a look at daily ATR at the time of the trigger, it's 138 pips. So it's well below half, which means the touches are close enough to each other, and which means we can take this trade. So where do we sell? Last bit of structure pre-breakout, naked level. The level is naked. Where's the last bit of structure before the breakdown? There. Why is it there? Here we have a bit of support before we then close through the entire level with this candle. So this candle triggers the breakout. This is the entry level. So if I'm going to clean that up, this is it. We sell the low and the stop goes above the trigger candle, and we go to the next bars. Zoom out. And that is a stop loss. So we hit stop loss on this one. The entry was on this particular day, which is the 27th of June. That's trade number 2, guys. On to trade number 3. And do you see how quick this goes? if it's very structured and if you took the time to build clean rules. If you do this 1 hour a day, after a month, you have done so much backtesting. It's insane, but people just can't seem to bother to do this. So let's do the next trade. So here we have another setup. 3 touches, as you can see, number 1, number 2, and this is number 3. We want to enter off a naked level at the last bit of structure made, which is this high. So that's where we're going to buy. This is the entry candle, stop goes below there, and we target a 1-to-1. Look at that. Jesus, 2R. And that's way more than 2R. So again, we fill in the date. We get an entry on this candle, which is the 12th of August. Let's see. And we're filling yes, yes, yes. And of course, you want to track the MFE because, Jesus, this is a big move. And then you go to the next one. And this is how you backtest. So let's take a look at a new trade setup. Let's see if we see something developing. And we have another 3-touch level. Touch 1, touch 2, touch 3. Last naked level is that particular low, stop above that candle, and we go to see if we get a fill on this trade. And as you can see now, I'm still leaving the order in. But if you're backtesting, you might notice, hey, I don't really feel like I should be taking that level because price is already so far away from it. Then you build a rule in. You'd be like, okay, if price, I don't know, after 30 days still hasn't hit my level, I'm going to delete it. Simple rule, which makes it way easier to test and to execute it in the future. So those are all things that you might come up with during the backtesting. Let's see if we got a fill. No, we didn't get a fill there. And we get stopped out. So let's see this particular day, 21st of November. And we didn't get a target. So that's basically it, guys. During testing, you will come up with new rules. Maybe if you take a look at levels, you want to be like, okay, the level is only valid if the most recent touch till the first touch is within 50 days, for example. So that basically means that the level has to be quite recent. You don't want to have a level that was valid 3 years in the past, but you can see like it starts with an idea. Okay, I want to emphasize recent levels more. How am I going to make a rule around it? And then you come up with this rule, for example, and you test it out to see how it performs. You get different outcomes. So that's it, guys. This strategy is still profitable, but we only took 4 trades. So what I want you to take away from this is think for yourself, am I being this clear if I'm going to backtest? When I'm backtesting my strategy, am I this clear? Are my rules clear? And in the beginning, it can happen that they are not that clear. But please, when you're backtesting and you notice, hey, there's a gray area, I'm not sure, that's an alarm bell going off. Then you should be going back to your strategy and think like, okay, how can I make this more clear? And then step by step, you build this into a strategy, into a profitable strategy. If you have questions, let me know. Thanks for watching, guys, and I see you in the next video.